What's going on, team? Welcome back to the channel. My name is Xander with Fates Your Trading Academy. This week, we're doing a Money Monday, which is our weekly stock talks. Last week, just to recap what we had on watch, we had open OPEN, that one ended up pulling back with the market, along with the market pulling back as a whole, something we also predicted. But then after, we saw a 9.56% push on Thursday and Friday. Another one we saw was eBay. That one pushed 4.7% on Monday, even though the market was selling off. Another big winner we had was UPST. That was a big winner for us over the last 2 weeks, actually. And this last week, it actually gained 14.24%. The next one that we saw was Microsoft, MSFT. That one gained 4.67% on the week. Another one we had was FLGC. That one recovered on Friday with a 41.22% rally. Another huge one that we had on watch was PMCB. That one rallied 217% Monday through Wednesday while the market was pulling back. Another one we had was mRNA. That one gained 9.3% on the week. And then we also looked at Hood. That one rallied 7% on the week into Wednesday. We had a lot more on watch. The team got all of these on Sunday night before the market even opened. So they were ready and they were prepared to take advantage of these opportunities. So if you guys want to be taking advantage of these opportunities, work with me on a closer basis. If you're not part of the team yet, make sure to reach out to me in the link below. That has my Instagram. Reach out to me, DM me trade, and then we can get you set up to see if you are a good fit to work with me on a closer basis. This week, what we're going to do is we're going to jump into the SPY, the S&P 500. We'll talk about what that's all about, where that one's sitting right now. We'll also take a look at the NASDAQ. So SPY, jumping into that one real quick. Last week, we did predict this drop that happened. It ended up pulling back all the way to the SMA line. As you can see, we pulled back right to this green line, which is the simple moving average, the 200-day simple moving average on the 4-hour chart. It also lined up very well with this support level right here at $437. We ended up pulling back. We ended up bouncing, and then we have now recovered to the current highs that we're at right now, making higher highs. I anticipate the SPY pushing higher. I wouldn't say it's going to, go parabolic or anything, but we're going to continue to see, slow and steady pushes to the upside. I expect to happen, for another 20 days. That tends to be the pattern that we have been seeing in the SPY. Every 20 days, we end up seeing a pullback. So we saw, a pullback here back in May. And then we had 20 days, and then June, we had a pullback. Another 20 days, July, we had a pullback. Another 20 days, August, we had another pullback down to this simple moving average. And now we're pushing up again. So we're 2 days in right now. I would say we have another 18-ish days before I would start expecting another market pullback or a correction. Similarly, we are looking like we're starting to get a little overbought here on the RSI and MACD as well. So I wouldn't be surprised to see a little bit of a pullback down here. Nothing too crazy, but probably down to this EMA line right here, this blue line, just to get correct, from this correction that we have been recovering from. So that's kind of what's going on with the SPY, the NASDAQ. So let's take a look at that. That's /NQ. This one here, very, very similar setup as to, the SPY. We're gonna really follow very similarly in both of these. We ended up seeing that pullback that we did see on the SPY. We saw that as well last month as well. We saw that pullback, and now we've had a strong push to the upside. We're starting to look a little overbought here on the RSI, and the MACD is looking like we might start pulling back, which would, add up very well with the SPY that we've been seeing as well. So that's what's going on with the overall market. If you guys find any value in this material that we're covering right now, make sure to like this button and subscribe if you're not subscribed. We do this every single week, keep you guys updated on the overall market conditions, the technical setup of the markets, as well as present you guys with opportunities for the week that's about to happen, right? So last week, we kind of went over, the results that we saw from the watch list of last week. This week, we have quite a bit more stocks on the watch list. So we're going to go through them fairly quickly. If you guys have any questions, make sure to leave them in the comments below. If there's stocks that I didn't cover that you guys want me to cover either on this next week, that we're going to be going over. If you see opportunities that I missed, make sure to drop them in the comments as well. So let's go ahead and jump into the first one that we're going to be taking a look at. The first one's going to be MPAA. Like I said, we're going to go through these fairly quickly. The setups are, fairly clear. Either they had some significant pullback because of the market, or there's earnings, or, it's just a great deal and a great setup that you guys should add to your watch list and pay attention to. So MPAA, this one has been trading in this horizontal channel for some time. We ended up pulling back to these lower levels here. This adds up very well with these, with this support level down here that we have been respecting back in, beginning of this year. So we ended up pulling back to that level. We have seen a bounce. However, we're still not very oversold, I wouldn't say. So we might still have some room to go down lower to maybe $19. So I would be paying attention to that. As long as we're under the EMA, I would just stay patient with this one. However, the opportunity is definitely there. I can definitely see this recovering at least to the simple moving average, the 180-day, which is in about 11 to 12% profit potential, if not higher, up to this resistance before. So add this one to your watch list. Stay patient with this one. I would probably set my alerts down here above the the EMA, just in case it does break above it, so that you don't miss out on this opportunity. But that's what's going on with MPAA. Great opportunity, very predictable horizontal pattern. So make sure to not miss this one and add this one to your watch list. This hasn't been this low since, like I said, the beginning of this last year. So this one's definitely worth paying attention to. The next one's going to be BABA, BABA. This one has been on watch for a very long time, ever since, the news came out with, China cracking down on Alibaba. And the whole overall situation with China. So this one has been pulling back. We have been at 274, which wasn't all-time highs, I wouldn't say. We have seen higher or price action very close to that, 271, 270, and then 274 right back here. So we ended up seeing a huge pullback. We're at $152.80 right now, which is the lowest we have seen this in a very long time. Let's take a look at, a daily, maybe a daily 2-year. We haven't seen price this low since basically, I would say, September of 2 years ago, basically. So this is a huge opportunity. The profit potential is massive here. All-time highs is $319. We're looking at about 100% profit potential. This one is more of a long-term play. I wouldn't say, don't expect this to be anything crazy over the next week or two. It could very well happen. However, slowly, I would encourage you to slowly add to this position over time. Like I said, this is not financial advice, but this is what I'm doing. And I'm just sharing what I'm doing with you guys. That way you guys can stay informed as well. So Alibaba, huge opportunity. Definitely one that I'm paying attention to. Very oversold on the 4-hour. It looks like we did push above the EMA here. However, I wouldn't be very hopeful that we're going to be, pushing to crazy highs or starting a huge recovery until we actually break this $200 level. So until then, I'm just going to be slowly adding to this position and taking my time with this, building this position over a period of time for the next year or so. The next one that we're going to be taking a look at is F for Ford. So Ford, we have been seeing a very consistent uptrend pattern here above this simple moving average. We have been bouncing on this level, and we ended up pushing below it just recently. And now we're starting to potentially make a recovery. We did break above the EMA right here just today. So this is starting to look promising. We have been very oversold last week, so I wouldn't be surprised to see this potentially start recovering. I could see this recovering up until the 180-day, which is about a 9.22% profit potential. I wouldn't be too wishful about seeing this recovering to 1658. Could happen, but I would start looking to take profits around the simple moving average. The 180-day. That's what I would be looking at. We'd probably become oversold or overbought at that level as well. So keep that in mind. That's what's going on with Ford. That's what I'm paying attention to. The next one's going to be bank stocks. The first one's going to be BAC. So this first one's going to be BAC. So BAC, we ended up seeing a pullback along with the market pulling back. We had highs of $43.50. We're at $40 right now, $41. So from current price points to those levels, we're looking at about 6%. This is a very consistent, strong stock. If you're looking for something stable and consistent and predictable, this is probably it. We saw a pullback here with the overall market happen, and it looks like we are starting to bounce here on the simple moving average, the 200-day and the 180-day. So this is what I'm paying attention to. I really like this one for just a consistent play that's going to hold up very well, and be consistent and consistently bring you in profit. The next one that's going to be bank stock is going to be USB. Very similar setup to BAC. Ended up pulling back with the market pullback, ended up bouncing here. It looks like we're attempting to break the simple moving average, this SMA, and the MACD is looking like we're ripe for a nice push to the upside. So from current price points, I would look at to 62.47. We're looking about 9.7% profit potential. Also very consistent, very strong and stable. So if you're looking for something strong and stable, this is definitely it. The next one's going to be Vail. This one here, huge pullback. We ended up pulling back to this previous resistance level that used to act as a resistance level, and now it is acting as a support. So from current price points, we're looking at I wouldn't measure to all-time highs, but I would measure it to that previous resistance level. And that's 17.2% Vail. The setup looks very good. We're looking overbought on the RSI. huge pullback. After earnings, this pretty much started tanking. And so now it looks like we're starting to find some support. We had support back here at this level, and now we're looking like we're stabilizing for the last few days. So I'd be paying attention to this EMA line, make sure when it breaks it, that's what I'd be paying attention to get an entry. It looks like MACD is starting to push to the upside, curve to the upside. And we have plenty of room to run on the RSI, as you can see. So huge potential here. Definitely one I'm very interested in and paying attention to. The next two they're going to be airline stocks. Airlines have been pushing lower along with hospitality due to the virus and everything else happening around us. So with everything coming back, there's a little bit more pressure on these companies, so they have been pulling back. It looks like we have pulled back, and we ended up bouncing 2 days ago here at this support level that we ended up bouncing at back here on the 19th as well. So we ended up pulling back, and now it looks like we're starting to push to the upside. We have some room to run still. I would probably watch this RSI or the SMA with, this is about a 7% profit potential, 7.28 profit potential to the simple moving average that has been acting as a resistance, right? So we have gotten rejected here before, got rejected again, and now it looks like we're pushing up to this level again. This lines up again with a resistance level of $20.25. So if this does follow the pattern and we do end up getting rejected by the simple moving average, we're also going to get rejected by this resistance level. If we do break above it, expect this to start pushing another 22-23%. So I would watch this to be my first take profit level. And if it does break higher, then I would consider re-entering. But as of right now, this is what I'm paying attention to for this exit here at $20.30. That would become very overbought here on the RSI as well. So I wouldn't be surprised if that pans out that way. So AAL, that's American Airlines. The next one is UAL. That's a very similar setup to the American Airlines. Airlines all kind of trend together. So this one too had a pullback, ended up pulling back again to that same support level, ended up bouncing, and it looks like we're starting to push higher to the upside. We did have the 50 simple moving average act as a resistance prior. And now then we had the 100 act as a resistance. So now we are approaching the 50 and the 100. So I'd be watching for a break above the $46.82 level. If we do break above it, expect a push to the upside, about 18.15%. That's what I'd be watching. Obviously, airlines are going to recover at some point, right? So it's just a matter of how patient you're going to be with this, right? It has been, this is, these levels are about as low as it's been in pretty much a year for the most part, since basically February. I don't want to say a year, but February, right? So this is a really, really good deal if you want to stay patient with this as well. Obviously, they will recover. It's just a matter of time and giving it some time and staying patient with these plays. However, definitely two that I'm paying attention to. The next one that I'm taking a look at that I really like is CLF. This one here, very consistent uptrend pattern, holding this simple moving average, the 180-day simple moving average, very consistently, up and down, consistently, constantly bouncing here on the simple moving average. A little bit of a drop before, but overall, it's always pushing higher, higher, higher. So we just pulled back to the simple moving average, and it looks like we're starting to push back up to the upside. So I would expect the recovery at least to the $26 level. So we're looking at about a 9.1% profit potential if we just continue to follow this trend pattern. It's very, very simple to trade something that's obviously in your favor and it's following an upward momentum trend, right? So obviously we have plenty of room to run on the RSI. MACD is looking good, and I'd see this push, very, very predictable that this is going to be something that's going to happen. I wouldn't expect this to push any lower. And if it does, obviously we're going to definitely recover. But as of right now, it looks like we did bounce on the simple moving average. We are above the EMA, and it looks like we're about to break the 100 and the 50-day moving averages. When we do break above that, I wouldn't be surprised to see this move to 26.55, if not higher. So very, very attractive play here on this one on CLF. XOM, that's going to be the next one that we're going to take a look at. Oil has been pushing lower over the last few weeks. So there's three companies that I'm paying attention to with oil. XOM, obviously ExxonMobil. This one has pushed down from 64.93. It looks like we're starting to push here up to the upside, obviously with the market recovering. So what I'd be paying attention to is a break of the 50-day moving average and the 100-day. Obviously, 50 has been acting as a very short-term resistance level. 100 has been acting as a little bit of a longer term, and it looks like we're starting to push through these levels. So we'll see if we do push higher from current price points to those highs. I see a 15.52% profit potential, right? Very consistent upward trend pattern that we've been seeing over the last, months, right? Since basically last year, we've just been seeing a consistent uptrend pattern. So this pullback, very, very attractive. I would say I'm very, very interested in this. So definitely one to consider, right? XOM. The next one that's going to be similar to XOM is CVX. This is Chevron. This one, very similar setup to the oil stock, right? We had a pullback, highs of 113, pulled back all the way down to 93.38, and now we're starting to push to the upside. Very, very similar setup. So if oil starts pushing up, obviously this is going to start pushing up. Profit potential here is 13.76% profit potential. Very exactly the same setup, basically. And the last one that's oil related is going to be USO. This one is this one's an ETF. And so this one is going to correlate very, very similarly to XOM and Chevron. So, obviously this is definitely going to push as oil prices start pushing higher. So very, very similar setup, exactly the same setup, I would say. So just keep that in mind. So those are the three, if you're trying to get into oil and if you're paying attention to those and you believe that they're going to start heading to the upside and recover, they all provide approximately like a 12 to 15, 16% profit potential on all of them. So stay patient, make sure to wait for those to break above the moving averages, right? The 50, 100 and the 180 day. And as those start breaking, you can continue to add position to that, add size to that, right? The next one that we're going to take a look at is going to be MU. This one, very, very attractive uptrend pattern. Basically since last year, end of last year, we've been trending higher and higher and higher, hit 96 as all-time highs. And then we ended up pulling back all the way down to the 68.81 level support. That's the lowest we've been in since basically this entire year, right? And so in the last 8 months, this is as cheap as this stock has ever been. It has been holding the support very well, and it looks like we're starting to push higher through the EMA. Obviously, we're pushing above the EMA, and it looks like we're starting to push above the 50-day moving average. So definitely another one to consider and add to your watch list if you have not added this to your watch list yet before. Definitely a great setup, very, very cheap stock at a great deal. And so if you're looking to jump into this profit potential, I wouldn't say don't get hopeful and expect this to recover to 96, but at least to those previous highs before we saw that massive drop. And that's another 16% profit potential, which would act as a potential resistance as well. So make sure to consider that. Let's go ahead and chart that resistance out right there. That has been a resistance prior to. So if we do push up, I would expect this to act as a resistance. I'd probably look at that 82.63 level as a potential resistance level. The next one that we're going to take a look at is going to be mRNA. This one did very well for us. And it looks like we did start pushing higher. This one has been announced to the team. This one looks like it did push higher today as well. So obviously with the FDA, trying to pass the vaccine, one of the vaccines, right? Obviously, Moderna is obviously going to push higher. That can go either way, to be honest. It can, on the news, it can sell off because of the news, or it can push much higher if it does get approved, right? So make sure to keep that in mind. It looks like we are breaking, and we did bounce, had a double bottom here, one bottom, two bottom. We're holding the 100-day moving average, and it looks like we did break above the 50-day moving average. So if we recover to those all-time highs, we're looking at about 15.76% profit potential. This one is very, very high up. So this one does come with a greater form of risk. So make sure to consider that and keep your risk tight and manage your risk on Moderna. The next one that we're going to be taking a look at is going to be BA. This is Boeing. Huge dip right here that we saw 2 days ago at the end of the week when the market sold off, and now it looks like we're starting to push up. Once again, the team knew about this on Sunday, so they were able to take advantage of this play and the push up and the move up that happened today. So we had a huge move happen today on Boeing from basically the close pre-market all the way until right now. We saw a 2.47% move on Boeing. Strong, consistent uptrend pattern on this company. Very consistent company. So definitely one to pay attention to, add to your watch list. We ended up seeing, if we're paying attention on the daily, looks like we are starting to curve up here on the daily MACD. And it looks like we're starting to push up. I would expect about 236 to be a potential resistance level. But that's what I'd be watching here with Boeing. Like I said, 240 level is probably another level that I'd be paying attention to on the way up. So that's what's going on with Boeing. We do still have some room to run with it. However, stay patient with it. Give it a few days to pan out, right? Because this moved a little bit slower than some of the other stocks. The next one is going to be Oracle, ORCL. So Oracle, very consistent uptrend pattern. Very, like I said, consistent uptrend pattern. We have just been bouncing here on the 100-day, 180-day, and 200-day moving averages. The setup is looking very, very good. Excuse me, throat's kind of drying up. Setup's looking very good on the MACD. Looks like we're starting to curve up to the upside. RSI, plenty of room to run, very consistent uptrend. This doesn't move too crazy, but it's very consistent and very uptrend. So if it's very consistent and predictable. So if you're trying to get into something that's not as volatile and very consistent, this would probably be it. And, obviously the market is going to have an impact on it, but if the market is going to continue to push higher, this will continue to push higher as well, in my opinion. So that's what we're watching here with Oracle. The next one is going to be Facebook. This one was something that you could have gotten an advantage of. If you were part of the team, you knew about this play. This pushed up today. It pushed 2.05% actually. Market pulled back. This pulled back down to the simple moving average, the 180-day and 200-day moving averages. Very consistent uptrend pattern basically since February. So very attractive. Facebook's not going anywhere. So once again, another consistent company that if you want to be a part of, definitely has room to potentially grow and, be very consistent. And, you can consistently ensure that you're going to be locking in profits on something like Facebook. The next one's going to be Race. This one here, very consistent as well in the last basically month or two. However, in the big picture, if we're taking a look at this in the big picture, what we're seeing is, we consistently bounce here on the 180-day moving average if we're looking at the daily chart. So it looks like we came down to this 108-day moving average, and then it looks like we're starting to bounce. I would expect this to probably move up till 226. That gives you a profit potential of approximately 4.2%. And then I would expect a potential resistance. It looks like we have been having this resistance right up here. So I wouldn't be surprised to see this come up right about here, probably 230, and then get rejected and come back down to the simple moving average, the 200 and 180 day. So that's what's going on here with race. This one is fairly predictable. The issue is it is volatile. So make sure that when you do get into this, if you do want to get into this, you get in at the very bottom of the channel, right? Don't try to get in at the mid channel and hope that it's going to perform, right? So I would say this still has some room to run. However, ideally, you want to get in at the bottom of this channel right here. That way, it's a little bit more predictable. It will take some time for it to recover. However, you're going to be in the right position to take advantage of those profits. The next one that we're going to take a look at is going to be Snap. SNAP. This one here, huge pullback, not super consistent. This one has been trading sideways for some time. And then we ended up pulling back to the simple moving average right here. Pulled back to the SMA line, and now where it looks like we broke through the 180 day. Well, we bounced on the 180 day, and then we broke through the 50 day and the 100 day moving averages. I wouldn't say this one has any huge potential. We kind of blew through that potential here on Monday. Basically Friday to Monday, we had about 4% gain here. And then from current price points to those all-time highs, we're looking about another 5%. However, the risk, I would say, is just not potentially worth it right now. Obviously, this has been pushing higher and higher, so definitely pay attention to it. Add it to your watch list. We are approaching overbought levels, but definitely, stay patient with this one. Wait for it to have another pullback like we did to at least the simple moving average. The next one is going to be Twitter, TWTR. This one is a great, I would say, is a fairly great setup. This one ended up pulling back below the simple moving average. It looks like we're starting to attempt to break the 50-day moving average. We did bounce here at the $62 resistance or support level. That has been acting as a strong support level back here in March, February and March, right? So let's see if this holds it. If we do push above the 50-day moving average, the next level I'd be watching is the 67.83 level to break above that. And I would probably use this 72 level as a resistance, right? This has been a very strong resistance. So the profit potential here is about 13.37%. And then I'd manage my risk here at that support level right below where it ended up seeing a bounce. So probably at 3%. So 3% for 13%. That's what I'd be watching here on Twitter. We do have still some room to run on the RSI and MACD. As long as we're making consistent slow growth, I wouldn't be surprised to see this recover up to 62. So that's what we're watching here with Twitter. Pins is the next one, PINS. Huge pullback. We haven't seen this pullback basically since February. We're about the lowest price point we have been in for a very long time. So Pinterest, very interested. This one dropped here on earnings, and we have just been trending a little bit. We've been trickling lower and lower here ever since earnings. We ended up coming down to the support line, pulled back more with the market pulling back, and then we started seeing a recovery starting Thursday and Friday of last week. It looks like we're pushing up to the 50-day moving average. So that would be the level I'd be watching. That would be my first indication of a potential entry, is that 50-day moving average. So if we do break above the 50-day moving average, that would probably be where I'd be looking for a potential first entry. And that's about at 55.78. Until then, it could very well continue to slowly trickle lower and lower. So stay patient. Don't jump into it too early. Make sure to get confirmation before jumping in. However, we have been seeing a lot of growth here over the last couple of days. So make sure to consider this and add this to your watch list. From current price points to those all-time highs, we're looking about 38% profit potential. So the profit potential is definitely there. So make sure that, if this one's definitely something that you're interested in, you want to be a part of Pinterest or that stock, this one has a huge potential for profit. And if you're managing your risk properly, this could be definitely a great opportunity. So make sure to add this to your watch list. The next one is going to be Visa V. This one, very consistent uptrend pattern. This one's not too complicated. Uptrend consistent pattern, very predictable. And then we ended up seeing a nice pullback here after earnings, pulled back, and now we're starting to recover once again. I wouldn't be surprised to see this recover all the way up to 252. We're looking about 7.74% profit potential here. Very self-explanatory. great deal, great setup, great pattern, great historic play, historic pattern as well. So this is what's going on with Visa. Z is the next one that we're going to be taking a look at. Z pulled back. We have been pulling back since 208. We had that height on February, pretty much in the midst of the pandemic. We had the all-time highs here on Zillow, and then ever since then we have been pulling back lower and lower and lower. We're at the cheapest prices that we've been in since last year. So if you were looking to ever get into Zillow, this would probably be the better time for you to consider a potential play. I'm not saying that this is definitely going to recover all the way to 208. I would say that's a little bit far-fetched. However, I wouldn't be surprised to see this recover up to 126. So that's a profit potential of about 28%. Definitely something very realistic that could very possibly be in the near future. It looks like we are starting to break above the 50-day moving average. We're holding the EMA, so we just need to break the 100-day and the 180-day, and then I wouldn't be surprised. Even if we enter at 180-day, we're still looking at 15.32%. So if you get full confirmation by all of these moving averages, and this does push higher, that's still a 15% profit potential. Once again, cheapest it's ever been. So the risk is very, very minimal and the potential is very, very high. So definitely one to consider and add to your watch list if you haven't yet. The next one's going to be Teva, TEVA. This one here, we had a strong pullback here last week, along with the market pulling back, and it looks like we're starting to push up higher. I wouldn't expect this to have anything crazy. However, I do see this returning to those previous highs before the market sold off last week. So that's about an 8% profit potential. Plenty of room to run on the RSI. MACD starting to curve to the upside. So definitely, an opportunity to consider and add to your watch list. And it looks like we're starting to break the 180-day moving average. As long as we were above that 180-day moving average, we were pushing higher. When we broke below, we started pushing lower. So it looks like we are starting to break above it again. We tried once. We came down because of the market selling off, and it looks like we're starting to break above it again. Once we break above it, I do see this potentially pushing higher, at least to those highs. So 6, 7, 8%. And then if we do consider to push, if we do continue to push higher, this can very well recover up to, those 1174 levels, which is about 22% profit potential. Definitely one to consider for sure. The next one's going to be UAA. This is Under Armour. Under Armour here. Very consistent and predictable horizontal pattern. We've just been trading sideways on this. We pushed to 26, came back down, and we've been trading basically in this horizontal pattern for a very, very long time. So I wouldn't be surprised to see that push. It looks like we did push up to 26. Once again, got rejected, pulled back down to the 180-day level, 100-day and 180-day simple moving averages. And it looks like we're starting to bounce here. RSI looks like we have a lot of room to run, so I wouldn't be surprised to see this push another time to 26.45. So the profit potential here on that, I would say, is approximately 9%, and I'd be managing my risk right here at this support level. So I'd probably manage it at about 2-3% for that 9% profit potential. That's what I'd be paying attention to. MACD looks good, RSI looks good, setup looks good. Definitely one I'm considering for this next week. The next one's going to be UPRO. This is a very consistent uptrend pattern. This has been trading very well with the market. Market pulled back. Every time the market pulls back, this pulls back. We saw that market pull back. We talked about UPRO with the team. When the market did pull back, this is a very, it correlates very, very well. So the market's making higher highs. This is starting to make higher highs. We are starting to look a little overbought, similarly to what we're looking like in the overall market. So I'd probably stay a little bit patient with this, but definitely add this to your watch list. And if we do ever see another market pullback, just know that UPRO is definitely an option to consider jumping into if you don't want to jump into the SPY or the NASDAQ, but you want to jump into the actual move of the market recovering. This would probably be the play that you would want to be doing. So that's going to be the ticker for that. Still definitely very consistent and uptrend. And has an uptrend pattern. So, definitely a very strong, predictable pattern that you can invest in or trade. knowing that if the market continues to push higher, this will continue to push higher as well. So that's UPRO there, PayPal, PYPL. PayPal here, we saw a nice pullback happen here with the earnings, and then we ended up seeing the market obviously push it lower, and we ended up basically kind of forming a bit of a double bottom here, I would say. And it looks like we're starting to push a little bit higher. It looks like we're getting rejected here by the 180-day. We're starting to see a bit of a change of color here to the purple on the MACD, which isn't a very good sign. And the RSI starting to curl to the downside. So I wouldn't be surprised to see this push lower. I would stay patient with this. However, PayPal obviously isn't going to go anywhere. So a recovery is imminent. Just stay patient with as far as, you know, getting a better deal at this one. I would say the levels that I'd be paying attention to are those two levels. This one right here is 264. I'd probably wait for this to push at least to 264 before considering this as a potential play. Until then, just add it to your watch list to make sure that you have it on watch. The next one is going to be Starbucks, SBUX. This one had very good earnings. We ended up pushing higher to 127.89, and then ever since then we've just been pulling back. Consistent uptrend pattern above the simple moving average, the 200-day. We ended up pulling back, and then now we're starting to consolidate a little bit and potentially start pushing to the upside. We have a profit potential of about 8.85%. So definitely, you know, worth considering. We haven't been this low basically since 2 months ago, about a month ago. So we pretty much gave back everything that we accumulated here on earnings, on the good news on earnings. So, you know, if the earnings do hold up and we end up continuing to push higher with the company and following this trend, I do see us making higher highs, at least recovering to, you know, those pre-earning levels. So that's about 5%. So definitely one to consider and add to your watch list. Plenty of room to still run on the RSI, and the MACD is still looking fairly good on this one. So a couple of more we got are going to be Amazon. This one is very attractive. This one here ended up having a huge pullback after earnings. And this one hasn't been as low as it's been since June. So June was the low last time it was at this price point. We ended up pushing higher today. Huge opportunity. We saw a 2.46% push today. And then we ended up seeing a break above the EMA, the 50-day moving average. So I see this recovering absolutely. This is a very consistent uptrend pattern. Amazon has been doing very well. So I see this recovering at least to the simple moving average, the 200 and the 180-day. That's a 6.5% profit potential. Huge potential on this. Definitely consistent. Amazon's not going anywhere. They're only going to get bigger. So if you ever were looking for a time to jump into Amazon, this would probably be the time to consider. The next couple are going to be fairly quick. Fiverr, FVRR. Very similar to Amazon, huge pullback on earnings, consolidated, and now we're starting to push up. I see this definitely recovering to pre-earning levels. So this is more of a longer term play, but huge potential. We have a 55% profit potential. That is massive. And that's just the pre-earnings levels, right? All-time highs, we're looking about 50% to all-time highs, and to pre-earnings levels, sorry, excuse me, that's 36.66%. So huge profit potential on those two. Amazon and Fiverr, very attractive plays if you're looking for something longer term. KMX, this one's fairly consistent. This has been trending upwards over, you know, the last few months. I would say basically all year long. This has been trending above the simple moving average all the way up until May. We ended up pulling back below it, and now we're right above it again. Came down to it, and it looks like we're starting to bounce here. We're consolidating. I would say, you know, a recovery to the previous resistance. That's about 8.46%. I would manage my risk just below this support level right here. This has acted as a previous resistance and a support. So this is a very critical level to consider. Let's go ahead and mark that off. And then the level right below it is going to be that next level that we'd be paying attention to. So I'd manage my risk right under 122.69. We are right below the simple moving average. So I would expect this to push higher. Like I said, the potential is there, but obviously if we do break below this level, I could see us pulling back right back down to that 112 level. So that's CarMax. The next one is going to be WYNN, WYNN. This one is huge. This one pulled back massive. Had highs of 143.88, and we've been pulling back ever since basically March. And now we're at the lowest price that we've been in since basically January, right? So this is a very, very good deal. We ended up bouncing on the support, and it looks like we're trying to push through that 50-day moving average. I'd really wait for it to break above $98 before really making an entry. Just because then I would just get more confirmation that we're actually in a reversal. We have been getting rejected by this 50-day moving average. So this is going to be a very critical point here. If we do push through it, if we do, that's the first sign of a good, potential reversal happening here. However, if we do get rejected, we could push lower. I wouldn't be surprised to see that happen. So that's what's going on here with WYNN. We are looking a little overbought. So, this is going to be the test right here, the 50-day moving average. If we break above it, got rejected here before, got rejected here before, got rejected again, got rejected again, got rejected again. Now we're here at that same point again. So let's see if we break it. If we break it, that's the first sign of a reversal occurring. So profit potential here, I would be measuring it to the simple moving average, the 180-day. It's 12, 13%, 14%, just to that level. That'd be the first level that I'd be watching to be a resistance level. So that's WYNN. The next one's going to be Roku, ROKU. Huge pullback from 490. Earnings pushed it lower. Market selling off pushed it lower. And now we're starting to make that recovery. 50-day moving average is what we're watching here. We ended up finding support at this level right here. Not quite, I wouldn't say quite that support level that has been holding very well, but fairly close. And it looks like we're starting to make that recovery. Let's see if we do break above the 50. If we do, that would be the first indication of a potential continuation of the reversal happening here. Potential recovery back up to that 490 level that has been acting as a resistance before, back in February and then back in the beginning of this month. So beginning of August. So let's see if we end up breaking above it. The opportunity is definitely there. I'd be managing my risk here at 324. So the risk to reward is definitely there, I would say. Looking about an 8-9% risk for a 27-28% profit potential. We have been trending above it we have been trending up as long as we've been above the simple moving average. And then when the 180-day, and then once we broke below it, we've been trending down, broke above it, started trending up, and now we broke below it again, trending down. And let's see if we're starting to break above it again, right? So that's really the first test is going to be the 50-day. And then after that, that's going to be the first resistance that I'm going to be watching. That's 14%. If we break above it, then we definitely can see moves to 490. The next level is the next one's that we're going to watch is going to be apps. Pretty big list here, but lots to watch for sure. Apps, a lot of opportunities, I would say. So apps, huge pullback since 102. We're at $50. All-time high, a recovery to those all-time highs. We're looking about, obviously 50%. However, the first level that we're going to really be watching is obviously we're starting to make this recovery. Let's see if we break the 50-day moving average. All these averages is going to be our resistance levels, right? So the first level that we're going to really want to watch is that 180-day. That's a 16.42% profit potential. We've gotten rejected there before once, and then we've got rejected there before again. Very similar. As long as we're above it, we're trending up. As long as we're below it, we're trending down. We're currently below it, but we're attempting to break to the upside. So let's see if this actually happens. If we do get in at the simple moving average and start trending higher, we're looking at 20% to those 79, 81 levels. Definitely one that's a little bit more volatile, but is definitely at a great deal right now. So definitely make sure to add it to your watch list if you're looking for something that's a little more volatile, but has higher profit potential returns. CAT is going to be the next one that we're going to take a look at. This one has been selling off ever since 246. We have been just trending and consolidating using this 199, $200 level as a strong support. We were very oversold when the market sold off, and it looks like we're starting to push higher. From current price points to the next level of resistance, we're looking about 7%. That would be, that next level that I'd be watching if we do break above the 180-day. We do have some room to run, so that would add up. And the MACD is starting to curve to the upside. So let's see if this actually pans out the way we want it to. That's the setup here with CAT. The next one that we're going to look at is Chewy, CHWY. This one has been trending up as long as we were above the simple moving average 200, broke below it, trending down. Looks like we broke above it, and it looks like we're starting to trend up again. We had highs of 120. And it looks like we just pulled back to the 180-day moving average. We do have earnings coming up, so that's on the 1st. So be aware of that. We're obviously at the 180-day moving average, but that doesn't mean we can't break below it again and start trending down like we did when we did break below it before. So keep that in mind. We are fairly oversold, so it is a fairly decent deal, but just be aware that on the 1st we have earnings, and that can push the price either direction. So I would probably stay away from this until after earnings and see what happens, and just be more of a reactive trader than anything with this play here on Chewy, CHWY. The next one that we're going to take a look at is going to be DDD. This one here, 3D Systems, had highs of 56.98, pulled back. We have been trending right below it. We had earnings happen, and it shot the price up, and we ended up pulling back right after earnings to basically pre-earnings levels. And it looks like we're attempting to break above the 180-day. So I'd be watching just above that 180-day, that $31 mark. If we break above it, from that price point to that resistance level, that we're looking about 28% profit potential. So those are the levels right here. We're watching this potential resistance if we do break above the 180-day, and then we're watching the 180-day. If we break above that 180-day mark, that's our entry, right? That's when we're watching for an entry, because once again, if we're above the 180-day, we're trending up. Below it, we're trending down. Above it, we're trending up. Below it, we're trending down. If we break above it, we're going to start trending up, and I can see us getting, at least until that previous resistance before, and that's about a 33% profit potential. So definitely one to consider. Pay attention to this one. The next one's going to be Box. BOX. Let's see, Box here. This one was looking fairly attractive here with the drop that we ended up seeing. We did find support at the 180-day, and it looks like we're still holding the 180-day level. However, we do have earnings coming up on the 25th. Let's see what happens on earnings and be more reactive to that. The pattern and the trend is very attractive. Uptrend pattern, holding the 180-day moving average, consistently pushing higher and higher. So like I said, let's see what happens with earnings and be reactive to this one. That's Box.com is going to be the next one. Very similar to Fiverr and Amazon, pulled back on earnings, and it looks like we're breaking above the EMA, and we're starting to push higher and higher. The first level that we're going to be watching is going to be this, the 50-day moving average. We have had COM on watch since last week with the team. It's on watch this week again. From current price points to pre-earning levels, we're looking at about a 35% profit potential. And obviously, we're going to be watching our support right here at that 1448, 1450 mark. That's where we're going to be managing our risk here with COM. So teams up on this play for sure. The next one's going to be GoPro, GPRO. Very predictable pattern here with GPRO. Has been trading very, very sideways. And it looks like we're just basically hugging this support level right here. As long as we're at this support level, I'm not super excited or interested about it. I'm very interested in paying attention to the stock, but I'm not trying to jump into it just yet, just because it looks like we are starting to curve to the downside, and the MACD is starting to curve to the downside as well. So we can very much see a pullback down to, this 903 level, but this 903 level looks like a very, very strong support. So If we do pull back to 903, I'm going to be very interested in a potential recovery play here. That's going to be about a 24% profit potential recovery play. But even from current price points to those previous resistance levels, we're looking about also another 24%. So if we drop to a 908-ish, we're looking at about a 37% profit potential. From current price points, we're looking at about 24.6% profit potential. GoPro, something a company that I enjoy. So I'm obviously paying attention to this company. But once again, we are trending below the simple moving average. So until we break above it, which is this $10.72 mark, it's kind of going nowhere. So there's probably better opportunities that we've already discussed throughout this stock talk to consider rather than jumping into GoPro and just holding on to it and waiting. So that's GoPro. And the last two are going to be WWE. Had highs of 70.72, pulled back to the support level here at 47.72. And we've just been holding this level. This was a strong support here in February. We ended up pushing back down to this support again. And I would really be considering an entry around here at $46 to $47. That would be where I'd be looking for an entry point. We're at about $49. Let's see if we keep pushing higher, then it's definitely worth considering. The first level I'd be watching is obviously the simple moving averages. That's a 9.58% profit potential. And that would be the first level of resistance that I'd be paying attention to. However, for a better entry, I'd be looking for something around 46.014. MACD and the RSI aren't looking too hot, so I can see this definitely dropping lower. So I'd just stay patient with this one, but add this to your watch list, because if we do recover to, not even $70, but if we recover to about $58, $60, we're looking at about a 23% profit potential. So that's definitely one to consider. And that would be just, that wouldn't be too far fetched, because that'd be just above the simple moving average, the 200-day. And the last one is going to be EXPI. This one here, this one has been trending up as long as we were above the simple moving average. We broke below it, started trending lower, and then we broke above it again. We're starting to trend higher. And it looks like we popped up here on earnings, and then we ended up pulling back right after earnings, after that earnings push. So obviously we had a good catalyst on earnings, and then obviously people were taking profits or whatnot. So we ended up pulling back here to the simple moving average, and it looks like we just broke above it. We bounced on the 180-day. We broke above the 100-day. We're obviously holding above the EMA, and the first thing we're going to be obviously watching is that 50-day as a potential resistance. But from current price points to those highs that we jumped to because of earnings, we're looking at about 22% profit potential. As long as we're above the EMA or the simple moving average, the 200, I like this play. This has, a lot of potential if we're going to recover all the way back to 90. I wouldn't expect this to happen because that was the height of the pandemic. However, it wouldn't be too far fetched to see this 22 to 27% profit potential if it recovers to those levels that it was at after earnings came out and this thing jumped up. So RSI looks like we have room to run. MACD looks good as well. So that's it, guys, for this. Hopefully this video wasn't too long. I did want to share with you guys a little bit more opportunities that we guys have a wide range of things that you guys can consider and add to your watch list and pay attention to. If you guys liked this longer version of the video with more opportunities, leave that in the comments. Let me know. If you guys like the shorter versions, let me know as well. That way I can accommodate to what works for you guys and what's more beneficial for you guys. Once again, guys, if you guys liked the content, make sure to smash that like button. If you're not subscribed, make sure to subscribe. And I'll see you guys on next week's Stock Talk video.